I'll just speak to them.
Okay. Is that working?
Yeah, that one's working.
Okay, good evening everyone. How are you? Very good to see everyone. I know some of you from the UCAM just recently took an exam. This is a good way to relive. The professor that gave you the exam is right here. So if you're upset with him, you can ask him personally. I do appreciate everyone coming here. In our project, what we try to do is get some of our professors to do more contextualized or more in-depth analysis in their term of research. Professor Howard, definitely a good friend of mine, known for a long time now, right? Maybe 12, 13, 14 years. And good that he's able to come here and give a presentation on the world economy. Definitely his specialization, not mine. And also, after the presentation, he will take some Q&A as well. So I really encourage everyone to ask in-depth questions and challenge him, and we can have more further dialogue as well. Bram is here as well. Here you are, Bram. I don't know, I think everyone met Bram already. He's been in Vietnam. He's not in Vietnam now, but you first came here 5, 6 years ago?
Yeah, 5 years ago.
Yeah, 5 years ago. So, quite good. And so, quite good seeing some new faces as well. We do encourage this kind of proactive commitment from our students, and thank you very much for coming. I will now introduce our Professor Howard Nicholas, give his presentation. Okay?
Thanks. Hello, everyone. Again, nice to see you, and old faces as well. Actually, the old faces I don't quite recognize because we were having this disembodied relationship, weren't we, through the Zoom. I think we were using Zoom. So it's nice to see you in the flesh because honestly, I can't deal with Zoom teaching. You know, it's soul destroying for me. I'm sure it's even worse for you. But so nice to see you all. And one reason that we're doing this is I get constantly emails, and it's wonderful. I'm not complaining about it, but suddenly someone is reading something, they're getting nervous about the world economy, and they're writing to me asking my opinion because maybe their company is concerned and someone has asked them questions. And it's nearly always a few repeated things. And recently I've been telling people, look, I'm coming to Vietnam. Let's get together and talk about it. So what we thought, Douglas also has been thinking about this, is every time I come, we'll try and arrange a session. Maybe it won't be as big as this every time, but especially for those of you who are concerned about what's happening in the global economy. Because remember, I'm teaching you about the Vietnam economy and using Vietnam economy for our classes, but we don't really touch on the global economy. Yet, I keep referring to the global economy all the time. So we thought every time I'm here, we'll have a session on the global economy so that those of you who are particularly interested, and it also has a big significance for your work, then we can catch up with that. Now, I do this every quarter. I say I do this, but actually he does it, my son, you know, so he has hundreds of slides, and we then select the most important. Now, out of what we normally do, so this is normally a 2-hour session, isn't it, Bram? So don't worry, this is only going to be half an hour. Just a few important things which are addressing what people keep asking me, okay? And it's basically this. The questions are, have we now reached the bottom of the crisis. So everyone is using the term crisis. And my view, so this sounds very dire, it sounds apocalyptic, but I don't think you have actually begun the crisis yet. Okay, it's going to get much worse, you know, and it's going to take quite a bit of time. So you need to prepare. Okay, so that's the first thing I'm going to say. The second question everyone asks me is about, yeah, I know, it's not very good news, I know. Second question everyone asks me is about interest rates. And of course, there are two answers that I will give. One is that interest rates will never go down to the very low levels they were, let's say, 2 years ago or 3 years ago. So we probably have now hit the bottom of the interest rate cycle, and I will explain to you what I mean by that. But the good news with all of this is that even though interest rates have risen a lot, soon, also in Vietnam, they should be coming down. Okay, so there's some positive news there. So on interest rates, for the long term, we've probably seen the lowest worldwide. But shorter term, you should see now some easing of the recent rise. Okay, so we've had big rises all over the world, also in Vietnam. So that was the second thing that everyone keeps asking me. The third thing that is there constantly on everyone's mind is the exchange rate, the strength of the dollar. Okay, is the dollar going to get even stronger in the future? Because that's hurting many countries, the very strong dollar. There, the longer term, we believe that the dollar will become very weak. But we don't know the short term. Okay, so because of what's been happening in the global energy markets, the dollar became strong. But we believe that oil prices are going to keep falling, weakening. We believe that energy prices generally for the short term will weaken. And that means to say the US balance of payments will not be as strong as it is now. And therefore the dollar will not continue to strengthen against all the currencies in the world. Okay, so even the short term, we think it's going to weaken. The long term, we are betting against the dollar, long term. The only question is, what is going to replace the dollar? That's the big question. And that, many different views, but we don't know. But what I thought is I'll just give you some slides to show you a bit of the data we work with and which is important to us for our personal investment decisions. Okay, so these are the things that we use. So whenever, you know, I've told you when I'm teaching, it's always in the back of my mind, the investment implications. So these are the things that we look at. Try and get these. So these are the things that I've just been summarizing. And what we can do is I will send a copy of this to Islam. I send it to you. And then anyone that wants to get a copy of this presentation you can send it to them? Yeah? Or Douglas?
Yeah.
Okay.
We'll take care of it.
Okay. So we start, so it's growth, equities, inflation, interest rates. You remember especially those of you who have just done all of this. And then the balance of payments and the exchange rate. So what we are seeing now is the Ukraine war is just simply shifting production in the direction it was already going, global production. So what we are seeing is China has been a big beneficiary of what's been happening. So China's strength has been actually growing during the recent couple of years. But that is part of a long-term trend. And so we will show you that. And then what we are anticipating is for the next 10 years, we think there's going to be a lot of uncertainty in the world economy. Next 10 years. And we will tell you why. This third one is the one that is worrying everyone, where we think we could now be headed into a really bad recession, okay? Weakness in the global system. And that means we won't come out of it till 2024, okay? So it's a long time for the recession. And the only question is whether the US will try and rescue the world economy again like they did in 2020. We don't think so. We don't think they will do that again because it's been very damaging to the whole world system what they did in 2020, and they will not do it again. That's our view. Those of you who have never seen this, I will show it to you now. This is this long business cycle we speak of. Okay? 60, 70-year cycle. And we are here. We are here. We are at the bottom of this long cycle. The top was around the 1980s. And now we're at the bottom. Now, there are two things that are very important to note in this long cycle is around here a new technology base appears for the whole world. A new technology base, you know, the same thing we used to see in the 1920s, 1910s with the combustion engine, the car. So now we are seeing the same thing with the internet and robotics and biotechnology, okay? So it's a totally new scientific base for the next long upward wave. And in this phase, like in the 1920s, there's massive turbulence. And the reason for a lot of this is the new technology. So you may not know it, but in 10 years' time, you will not be doing cooking in your house. Robots will do cooking. Robots will do cleaning. And we already see them in the factories. We're seeing them in restaurants already. And it'll go much more. So the whole way we live, the way cars are driven, so you know we're going to have driverless cars. Okay, so everything changes and then everyone is uncertain. All the old industries disappear and the new industries replace them. You don't believe it's going to happen because it's such a huge change, but it happens. And it's very disruptive. And what always happens is a new power, economic power emerges here. So we see this power now is China. The power here was the US. This is where the US emerged. And the US dominated the new industry. And now you see China is doing the same thing here. So we see this total new transformation. The and I will give you the data, the interesting thing here is the rate of profit is the highest that it has been for 40 to 50 years. So profitability is really high, especially in the new industries. There's massive rise in profitability, which is part of the reason for the high equity prices. Okay, because so here is what we have seen. If I look at the 1920s, the United States was doing to the world what China is doing here. The United States dominated world manufacturing. So they replaced the United Kingdom, Britain. So Britain was the main power. It produced most of the manufactures and machinery in the world. But from 1880 onwards, the US quietly replaced Britain. No one knew it till the 1920s, but it was a very slow process. Suddenly in the 1920s, Britain was no longer the dominant power in the world. Now, something similar is starting to happen with China. Okay, we don't know if it's going to be exactly the same. We don't know if China will really dominate the world. We don't know that yet. But as it stands now, China accounts, this is as a percentage of world manufacturing value added, so the value of manufacturing, China accounts for the same as the United States and Europe. So that means it's a very powerful force in the world system. And what has happened with the US is they've actually moved more towards the production of oil and gas. And you can see, if you look in 2007, the share of exports accounted for by oil and gas, total US export value, was under 5%. But now, we're looking at nearly 25%. Okay, so the US has shifted its dependence away from manufacturing and towards oil and gas. Okay, so it's not really competing with China on that front. And what we see is when we come to the bottom of this long cycle, like the last time, we see global debt rising, And what has to happen before the next upward movement of the long cycle, before we get here, that debt has to be destroyed somehow. Okay, because it's too much debt. The world has too much debt. So somehow this has to happen. Obviously, this happened because of a world war, but it doesn't have to happen because of a world war now. But we will see debt has to be destroyed so that we can start again, as it were. And so this is the long cycle. This is the 60, 70-year cycle. And around that, we have shorter cycles, 7 to 11-year cycles. Okay, and then as we go down the long wave, the weak period of the short cycle becomes longer, and it appears to everybody as if we are constantly in recession. Okay, so, it was only 2020 we had our last recession. Now we're back into recession. And before that, it was 2016, then 2012. So very short periods. So not 7 to 11 years, but much shorter. And this is characteristic of this phase of the long business cycle. Very many recessions, very weak, because we're now moving away from the old industries to the new industries. So we just put a chart to show you those, that you can see many more periods of weakness. Before, they tended to be more spread out. but now they're coming very quick, thick and fast, and now we have another period of weakness appearing again. And this is the most recent data that we have. This is to October, isn't it, Bram? We don't have any more recent. So this is the Purchasing Managers Index, PMI. And this is an early indicator of what is happening to world economic growth. World economic growth nearly always follows this PMI. So it's this pink, which is the world PMI. As soon as it cuts that line, then we start to suspect we're going into recession. Okay? It's not always 100% guaranteed that we have a recession, but it's, let's say, 80% sure. And one interesting thing is countries like Taiwan, because they dominate certain sections of manufacturing, they're very good early warning of weakness. So we follow and watch countries like Taiwan. We also watch others, isn't it, Bram? I forget. Who else we're watching? South Korea. Okay, so a few like that. We watch several of them. And when they all show us the same thing, then we say, okay, it's looking pretty bad. And then the question is whether the US government will do this that they did, a huge budget deficit to try and lift the world economy in 2020-21. And they did it successfully. Now the question is, are they going to do the same thing again? We don't think so. We don't think so. And now, has the Republican Party taken the Congress?
The House.
The House, sorry. They've taken it now. Is it definite?
The House, not the Senate yet.
Okay, so, to actually get legislation through for a big deficit will be very difficult. And this means to say, even if the government wants to do it, it's going to be very difficult to do what they did in 2020. And then the other thing that we keep seeing, which is quite astonishing, is the Federal Reserve keeps taking cash out of the system. It's absolutely unbelievable to see how much cash they take on a daily basis. Sorry, I took that out, but how much are they doing of reverse repos, Bram, a day? $2 trillion. $2 trillion, not billion. 2 trillion every day. They're taking cash out of the system. And the reason is because up till 2021, the Western countries, especially the US, was printing so much money that is what created a lot of the asset bubbles all over the world. Everywhere we see asset bubbles. Property, equities, everything. Now they're very frightened about the consequences. So they're trying to take that out. Even though they're actually dropping interest rates, the interesting thing is they keep sucking cash out of the system. So actually when you're sucking cash out, the interest rate should be rising, but it's not. Because every day they're taking this vast amount of cash out of the system. And that means to say they're not going to do what they did in 2020. They're not going to do that again. This is where we are. That there's a huge sucking out. And it's not only the US, but the Japanese and the Europeans. They're all doing the same thing. They're taking money out of the system. So what does that mean for share prices, the stock market? And what we believe is that this long upward movement of global share prices, especially American share prices, is probably coming to an end. Okay, so we believe that there should be now a further correction to share prices. So we've seen about a 22 to 25% fall in American share prices. We think, if we're right, it could go beyond 50% fall. Okay, so there's another whole leg to go. Other people don't think that, but we think that, so we are staying away from the stock markets. And one important barometer, incidentally, of the sucking of cash out of the system is Bitcoin. See, when money was put into the system, one of the results, you remember I told you, speculative bubble? Bitcoin was the biggest speculative bubble of all of them. So when the US started to suck money out of the system, you could see Bitcoin reacted almost immediately. And it keeps reacting to more and more money being sucked out of the system. Well, we think that also a lot of equity markets, not only the US but worldwide, are also going to weaken further. That's our thinking. And many people think that the Chinese equity markets have fallen a lot, so much so that they're now near bottom. They think the Vietnamese equity markets have also reached their bottom. We are not so sure. Okay, it may, you know, the bottom is only reached when everyone gives up. When everyone says, we don't want to see equities anymore. And I think a few of you were telling me earlier that people now don't want to talk about the stock market in Vietnam. They want to talk about other investments, isn't it? Okay, maybe that means to say that Vietnam at least might be coming somewhere near the bottom. And then, are the policymakers coming to the rescue? I don't think so. So this is this long cycle again. We know profits rise near the bottom. So this is as the technology has changed, as productivity has risen, profit rates have risen, actually. Even though, paradoxically, we're in such a difficult time, we're in a difficult time because a whole new production base is replacing the old production base. But that new production base is very, very profitable. Today, with 1 hour of labor, we can produce 100 times more cars than we could 10 years ago. You know? So it's a huge change that has taken place. And we will see it throughout many, many industries, but now that profits growth is starting to weaken. And this is the debate at the moment. So this is where we are exactly now. That this is global equity index fallen, so it's beyond 20%. 20% is the correction. Up to 20% is a correction. When it's beyond 20%, it's more than a correction. Okay, it's basically, there's the idea that everyone is getting is the government is going to come and print again. Okay, but it's not true. It's not true. They're not going to do it again. But there's so much money still, speculative money, that anything triggers massive movements of money all the time. And they're trying to get rid of all that speculative cash. You know? So I don't think we've seen the end yet. One interesting thing is that because China now is so important in the global system, we see its stock market seems to be moving earlier than the American stock market. We are not sure this is a good causal relationship. We're not sure of that, but something seems to be happening like that, that when the Chinese market moves, many months later, the other markets in the world move. But what we are now seeing is East Asian markets as a whole tend to lead the whole world. And that is because East Asia as a whole is now the production hub of the world economy. So that's why those markets become very important. And now this is why there was suddenly a rise again, is the question is, are the central banks going to allow stock markets to fall? That's the question. Our bet is yes, they will. And they will keep sucking liquidity out of the system. And the more liquidity they suck out of the system, the less money there is for speculative purposes. So we think that this fall could be much bigger than people think it's going to be. Okay. Inflation, interest rates, don't forget. So growth, equity prices, you remember? Inflation, interest rates. Okay, and for many people, this is the most important of all. For businesses, this is really important. Liquidity management, asset management. So any of you who are involved in treasury management, very important for you. So for banks as well, very important. And all of you who are aware of the property problems, you know how important interest rates are. Okay, so this is the relationship we have. So we think that over the long cycle, we've seen inflation fall and fall and fall for nearly 42 years. 42 years in the world economy. We think now that's the end. Okay, we think that inflation will go up and down a bit for the next 10 years, and then we'll start the long upward movement. Okay, so that's what we're looking at. And then the very interesting thing for everyone, and we have not seen this ever before, because normally inflation is the lowest in the advanced countries. So if I take the United States and Europe, they always have the lowest inflation when there is world inflation. So if Sri Lanka has 25%, we expect the US to have like 2 or 3%. Okay, but now we are seeing something strange happening, that US and Europe have higher inflation than other advanced countries, especially the East Asian countries. And that means to say that they're not as dynamic as the East Asian countries, because it's only the very dynamic countries that have the lowest inflation rates. So something very strange has happened. For example, I'm based in the Netherlands. We have 17% inflation. And many of you will say, when I say, oh, but you've only got 7%, you say, no, that's not true. The government is telling lies. You will say it's 12%. But if you go to the Netherlands, everyone says, no, the government is telling lies. It's not 17%, it's 25%. Okay? So we also have the same thing. Everyone knows that inflation is very high in Europe. I don't know the US whether they have the same opinion, but everyone is complaining that it is much, much higher than it's ever been, of course, in their lifetimes. But more importantly, they're looking at other countries and saying, but those countries are having lower inflation. Why do we have such high inflation? So this is a very important thing. The good news for all of you is we track world inflation linked to raw material prices. and they're down, and they're falling very fast. So we must have world inflation coming down in the short run, not the long run. And this means we don't believe inflation will ever go back to 1%, 0.5%, minus 0.5%, never happen again in your lifetime. Well, maybe your lifetime. You live a long life, isn't it? You don't know. So this is the way we remember the long cycle again. So this is 30, 40 years of falling inflation. And don't forget, that means falling interest rates. So for any investor, anyone managing portfolio, this is one of the most important relationships for all of them. Famous man called Bill Gross became famous because he actually discovered this long cycle. But he told everyone it was his genius at investing. No, it's not genius. Anyone who understands where inflation is going for 30 to 40 years knows interest rates are falling for 30 to 40 years. And that means bond prices rise. It also means property prices should rise. It means share prices should rise, because falling interest rate is lower discount factor. So all asset prices normally rise as interest rates are falling. Okay, so we're now at the bottom of that. And we don't know when exactly the long-term rise is coming, but we know more or less for sure that it's the end of that long downward movement. And so now we look at the inflation rates of developing countries, comparing it to the advanced countries. Can you see something very strange has happened? Normally, the developing countries higher than the advanced countries, because advanced countries are more productive. But now we get a change. So the question that is being asked is, why? What is the meaning of this change? And for us in Sri Lanka, I don't know whether it's true for you in Vietnam, you now see advertisements by our government telling German companies, come to Sri Lanka. I mean, we don't have dollars to import anything, but we are asking German companies to come to relocate away from high inflation Germany. I think it's much better bet for Vietnam to say, come to Vietnam, relocate away from high inflation Europe to our country. Okay, so this is real. This is happening now. You know, I was just talking recently before we came here, to some business people, and they were telling us the same story, that there's a lot of interest now being shown in East Asia to relocate business, because the cost, energy cost is what is the real problem for these countries. So here's primary. Can you see how closely primary commodity prices and inflation, I'm taking US inflation, let's make it easy, goes very closely with primary commodity prices, except here. So primary commodity prices already falling, but it takes a while before US inflation begins to go down. But there's a massive downward pressure on it, and we expect. Why is this important? Interest rates. Because now the US Federal Reserve cannot keep pushing up interest rates. You can already see bond interest rates have already fallen. So that's very important for decision making in Vietnam, because Vietnamese central bank interest rates are very closely tied to US Federal Reserve interest rates. And if there's now less pressure on Federal Reserve interest rates, then it should help in Vietnam. And that's what we're now coming to see. So by now I've already told you what I'm thinking about the interest rates. Again, very, very important. So I think we were discussing just before I started this that last year, because of the long cycle, interest rates had gone in Netherlands to 1.25% for 10-year loans, 1.25%. Now, for me, when I started buying my house, late 80s, the first interest rate I paid was 11.75%. 11.75%. Every year I made it variable. But now, last year, at 1.25%, I took 10-year loan, fixed it at 1.25%. Today, so my youngest son, his brother, is very angry with us because he can't buy a house. Because when he went to borrow money, or he was thinking about it, 6.25%. 6.25%. Like this, you know? Because suddenly everyone is thinking, oh, inflation is going to rise from now on. Interest rates are going to rise. And, you know, it's going to be more difficult. Let's put it this way. It's going to be more difficult, which means that property prices are going to be pressured downwards in the future. So all those people who think property prices were going to rise forever may be sadly mistaken, you know, because we are not going to have this long fall in interest rates to support property prices. So this is that long down, you remember I told you? Okay, so this is all the good years for everyone when interest rates kept falling. And the most important thing that we now see is if you take these arbitrary lines, which people keep drawing, you're starting to see that the recent rise seems to be like a trend change. You know, and there are more sophisticated ways of showing trend changes, but it suggests that something new is happening. And obviously underlying this is the central bank's lending rate. We call it the federal funds rate for the US. It's what they lend to the banks. And so we can see that they've been increasing, and this is the problem for Vietnam. The Vietnamese central bank has to follow. I'll show you here. 1 second. You see? Here is the federal fund rate. And here is emerging market interest rates. You know? So wherever the federal funds rate goes, the emerging market rates have to follow because of the relationship of the dong with the dollar, and most currencies with the dollar. So that pressure comes from the United States and the dollar being world money. Now, if this is starting to fall, it means less pressure on this starting to fall, less pressure on Vietnam's central bank to keep raising interest rates. Okay, so let us now see. This is what the market expects, because every time there is a recession, this light blue area, the US drops interest rates very fast. Can you see that? Really fast. And so now that we are more or less surely in a recession, this is what we're about to see in the United States. Okay? But my argument is they're not going to do it the same way they've done it in the past, like that, near zero. They will not do that this time. My guess is it will go to about Lowest will be 0.5%, but I think it'll be even 0.75%. So it will never be at this level. Okay, so this was just above 0, and this was at 0. But it's not going to be like that in the future. And the reason is because they're trying to get all that cash out of the world economy. That's the reason why they don't want to reduce interest rates to 0, because otherwise they're putting cash back into the system. And this is the repos we spoke about, the 2 trillion. See there? That is trillion every single day. That means they sell bonds to the banks and they get the cash from the banks into the Federal Reserve. This has never been seen before. This is a historic moment in time. You have never ever seen this before, and that means to say that doesn't matter what the Federal Reserve told people, in reality, they printed much, much more money than anyone ever realized that they did. So the range is between $20 trillion and $60 trillion. That's what we believe they printed in 2020, going into 21. That is such a vast amount of money that they unleashed a bubble all over the world. And that is why they're now desperately trying to suck it back out of the system. Last bit. The dollar. So we've been seeing the dollar falling for quite a long time against the other advanced country currencies. But recently we saw the dollar rising. And that is what I mentioned earlier. It's due to the energy prices and the shift of the US towards energy exports. And what we tell everyone, and it's an absolute law, every time you get a world recession, all the developing countries who are non-export-oriented manufacturers, so if they produce raw materials, or if, let's say, they only produce garments, but they're not diversified manufacturers, they all have currency problems. Okay, so you have to be very careful at that moment in time if you are invested in any of those countries, because at that moment in time, the currency falls between roughly 30% to, in some cases, 80 or 90%. Okay, like Sri Lanka is 80%. And there are countries worse than Sri Lanka. Now, what we have seen is it's not just the developing countries. Look at the other advanced countries. They've also fallen a lot. So when we say Vietnam's currency has fallen from, 23,000 to 25,000, then everyone is upset, isn't it? Because you say, well, our currency is weak. But actually, if you're holding Japanese yen, it's even much, much worse than that. The euro is also very badly off. The British pound is badly off. Even the Swiss franc has fallen. And what you see is, so here is this long-term weakness of the US. See, it's all negative. And Europe, Japan, South Korea, they're all generally positive area. But suddenly, with the Ukraine crisis and the rise of energy prices, they all go into negative territory. And the US now gets stronger. Their trade balance gets stronger. So that means their currency is getting stronger. These currencies are weaker. Don't be fooled by this. long term, the dollar will continue down. And there's one very, very important reason, and again today in the Financial Times, the same reason was given, is central banks around the world are dumping dollar assets. They don't want to hold dollars as reserves. They're frightened. Okay? We don't know why. I mean, I really don't understand at this moment in time why they're panicking and switching to other currencies, but they are. Here is what happens to these countries that are not export-oriented manufacturing. Can you see the collapse? All of them collapsing. Now, you have to feel very sorry for Sri Lanka because we are about one of the worst of all of these in this. But can you see, this was the last time we had a big crisis. It's always the same. Because at that moment in time, nobody's importing very much. So the exporters are always in trouble. And all developing countries, by their nature, are export-oriented. But here we have Vietnam. You're complaining about what? Look at how relatively stable Vietnam is. Try coming to Sri Lanka. You want to see an unstable currency? Okay, it's not just Sri Lanka. You can see there are all these other countries, and they're also badly off. Why is Vietnam different? And the answer is this. You see, you got hammered only because of tourism. See the dotted line? Your tourist receipts collapsed. Okay, so you lost all this foreign exchange. The tourists are not there. But something else was happening to compensate, and that is the important thing. And any foreign investor looking at Vietnam is going to say, wait a minute, how did Vietnam prosper during the lockdowns and the global recession? Look at this. The trade balance is getting stronger and stronger and stronger. You know? And that, anyone that's really looking at Vietnam is going to say, wait a minute. Even when everyone else is going down, Vietnam is getting stronger. Because once the tourists start coming back to Vietnam, then you're going to have such a huge increase in your reserves of foreign exchange that it's going to take your currency stronger. And that's your problem. Your central bank will have to use your foreign exchange to actually weaken the dong. Otherwise, the dong is going to get too strong. You know? So that is your problem, because you can see, look, this is quite staggering. This sudden growth of your trade balance. You know, you're exporting all these manufacturers now. And unlike Sri Lanka, so we also had this problem of earnings from tourism collapsing, and we just got wiped out. You know? And many of these other countries, it wasn't tourism, but it was things like garments exports and raw materials. But Vietnam was obviously producing things that everyone wanted to buy during the lockdown. Home office equipment, masks, medical equipment, all these things Vietnam was producing because of that huge diversified manufacturing base. So if I'm a foreign investor and I see this one chart, Vietnam is where I'm going. You know, because that is a very, very powerful chart. If you want to attract foreign investors, show them this chart. You know, they will say, wait a minute, what's going on in Vietnam? All right. So for the moment, Douglas, we're keeping our money in Vietnam. We're not leaving. Okay. And we're hoping there's a property crash. very good for Vietnam if there is. And then we can buy, because prices are too high. You know, these property prices are not good for the economy and too many speculators. So once we kill the property prices, then you will see it's a better environment for, you know, this continued growth. All right, guys, ask me questions. Some of the questions you were writing to me about.
Just now you said about when the tourists come back to Vietnam, then we have a lot of foreign currency. That means our reserve will increase. But why the government wants to weaken the Vietnam đồng because of the unbalance?
Well, the thing is, when you have a very, very strong currency. Sorry, yes. So the question is this. I said that when tourists come back and there's a huge accumulation of foreign exchange, let's say dollars, then obviously supply of dollars is rising, the price of the dollar is falling relative to the dong. So the question is, why is that bad for Vietnam? Well, in general terms, it's not bad over the long term, but over the short term, you have to be careful because that means to say the dollar prices of your goods are going to rise, the ones that you're exporting. You know, and that you have to be careful about, especially in a global recessionary environment. Longer term, it's okay, and that's what raises your living standards, because when you can buy more and more foreign goods with your dong, then you have higher living standards. But short term, you have to be careful. And that's why, so at the moment, the US is watching Vietnam very carefully because you're on that official list of currency manipulators.
Just been removed last month.
They were put on it last week.
Remove it.
Oh, they removed it. Okay.
Central banks actually manipulated currency.
Okay. Right. Oh, that's good news. I didn't know that. Okay. So at this moment in time, you don't have that problem, but you may have that going forward because, you know, my anticipation. So the last class, the last UCOM class, I've made a forecast that by 2030, didn't I say? 2030, the dong dollar rate is going to be about 17,000, 15 to 17,000 against the dollar. That's my rough forecast. Okay, so we don't know if that's going to work out. But if I'm wrong, Douglas, I said...
2030.
Huh?
2030, right?
Yeah. So if I'm wrong, I'm not going to teach after 2030, okay?
Vietnamese economists say that we do not to be so worried. They say that the world recession will be very little. Do you think so?
So the question is that a lot of Vietnamese economists say that the world recession will be quite mild, isn't it? And so we shouldn't be so worried. Well, I think you shouldn't be so worried as in other countries because you have a very strong economy, but I think the world recession is going to be a bad one. Okay? And not that I think, it's already started. Okay, there's a huge drop in demand, and there is every piece of evidence that the recession is already underway. We use one or two indicators. We use one indicator which has never been wrong, and that is called the inversion of the yield curve. The inversion of the yield curve. That is when short interest rates are above the long-term interest rates. Okay, so the long-term interest rates fall more than the short-term, that means that all the investors are expecting a lot of weakness in the economy. So we have seen that for the US, and we're now seeing it as of this last week, wasn't it, for Europe, the 10 and 30-year in Europe inverted.
If I get her question right, I think she's saying that also Vietnamese economists see a recession come, but that it's not going to be that bad.
That's right.
So why do you think it's going to be worse than maybe 2020 or 2000?
So for me, there's this other factor in the world economy that is very important at this moment, is they cannot run big budget deficits again. And they cannot print money like they did in 2020 to lift the whole world. Okay, so that was a very important thing for me, that they actually almost need a very bad recession. Because what they did in 2020 was so bad that there were no bankruptcies in a recession in 2020. On the contrary, the level of bankruptcies fell. Instead of rising in a recession, it actually fell, and that is all over the advanced countries. Now that's very, very bad in our market-based system, because it's a system of survival of the fittest. And if I don't allow the weak companies to be destroyed, I'm not allowing the market system to work. Okay, so that's why they won't do that again, but they're going to pay a heavy price for having done it in 2020. So now is going to be the time when people are, so that's what, if you read in the newspapers, a lot of investors are now demanding that the central bank save them again. But apparently they're not going to do that. We heard that also with Japan, wasn't it? Eri was saying the same thing with the Japanese. The central bank has now said, I mean, formally, that they're not going to rescue the various companies that are in trouble.
So, Professor, if the shark circles like 8 to 10 years, so where are we now in the downward?
We're just going on the down. So we just go right back up here. So here, this is what we're saying. Okay, so here you can see whenever this PMI, this is the global purchasing manufacturers index, when this plunges like this, we're in recession, you know, so then world output follows this very closely. So we can see that there have been periods of weakness, but never a plunge like this. And similarly here, 2020, we see big plunge. Now, this is what we're expecting. And we think that even though here there's a lot of resistance, because, you see, we had the last recession 2020, so technically we shouldn't have it till 2030. But the reason why we're having this recession now is because in 2030, the advanced country governments, also China, they put so much money into the system, they kept all the weak companies alive. None of them were destroyed. You know, and then when people were unemployed, they got Social Security. So it's like a recession like there's never been before. So there was a fall in production, but nobody lost their job. There was a fall in production, but no companies went bankrupt. You see, so it's the first time in 44 cycles that this ever happened. So this means actually that was not a proper recession. We're still waiting for the proper recession. They just delayed it. And now they made it, instead of the normal 8 7 to 11 years, now we're into the 12th, 13th year. And so we're long overdue a massive correction, a massive recession. And that has to happen. And of course, governments are trying to fight it, but in the end it's going to happen. And what we are expecting is that this will, you'll get a false signal, because if it goes straight down, then people know what to expect. But what you will see is a bit of a recovery, and then the next leg will be really brutal. Like what happened to Bitcoin recently. So Bitcoin recovered, people put more money into Bitcoin, now they're all running away from Bitcoin again because it's on another leg down. Then it'll recover again, people will say, now my chance to buy cheap Bitcoin. They'll get in, next leg down. And that's what we're expecting here. All right.
Professor, you said that Vietnam economy is not too bad because we have a trade surplus and high foreign reservation. But we see that our export is falling due to low demand in the US and Europe. So how do you think about the future?
I mean, that's where... sorry. So his question is that if there's a global recession, then demand for Vietnamese exports will fall off. And I said that Vietnam will not be so badly affected. This is relative to other countries. Everyone will go down. Everyone always does go down. The question is, who survives the best? Who suffers the most and who survives the best? And now Vietnam has this large diversified manufacturing base. So when COVID hit, you were able to supply home office equipment, shifting production to another sector. But 20 years ago, you couldn't have done that because you didn't have the production base to do that. Now you are stronger. You can survive the storm better, but the storm will still hurt you badly. And that is the real problem at the moment, is whether the government is going to take action to save the companies that are important to save. So if Vietnam relies on export-oriented manufacturers, the government should, let's say, provide concessional short-term financing for these companies. Okay? They should give tax rebates, they should give concessions on import duties, things like that, to help them survive. But if they don't do that, then the force of the world recession will be very damaging to Vietnam as well. So the question is whether the government knows the game and is going to play the game well. I don't know.
But we will have more production over here now. But the raw material is mainly import.
Right.
Yeah. So it's import to what, to our
Yeah. Actually, for most countries, I mean, you are not facing higher raw material prices than other countries. Everyone faces the same.
supply chain is also
The supply chain is the big problem at the moment. Okay, so there are all those supply chain rigidities that are damaging many, many companies all over the world. Now, the real question is whether you have a supply chain which is more robust than other countries. And that is I don't know. I don't know the answer to that. But in terms of raw material prices, all countries were facing the same problem. So it's not unique to Vietnam. Was that?
Yeah, but,
more.
so my question is how to survive such raw material prices and supply chains, because we depend too much to our neighbor like China.
Yeah, yeah.
Yeah.
You have to be friendly with China. But don't forget, it's in China's interest for Vietnam to continue producing, because China benefits a lot from Vietnamese production. Although the West doesn't realize that, I think people in Vietnam realize that China does depend a lot on, I mean, you just have to see the trade links between Vietnam and China, how they have grown massively. And I think as much as you depend on China, their interest is to make sure that things keep going smoothly in Vietnam in the future. I know we don't like China, but that's a different matter.
We don't like more than 50% our FDI is from China.
It's from China, yeah. And some people say even more, isn't it? I don't know if that's true, but okay.
One of the interesting things that you said, well, I've been in Vietnam working for about 14, 15 years. And in the past 5 months, foreign governments are proactively trying to get their companies to invest in Vietnam. So on Thursday, the Prime Minister of New Zealand, I was in a breakfast meeting with her. Message was the same. The ambassador of UK, I went to a conference before this one. Same thing. How do we get companies to invest in Vietnam? They're really forcing that. And the message before was always, how do we export? Even in terms of education, how do we export? Taiwan, I was there a few weeks ago, and they were discussing how to open manufacturing, how to move manufacturing from Taiwan into Vietnam. It's from the government level, they're trying to get their companies to invest in here, and I think it kind of mirrors what you said before. And I see it, I work on it from a different point of view, but it's really proactive in the past 4 to 5 months.
That's very important. I mean, I didn't know these bits and pieces that Douglas gave, but it's sort of reinforcing the same point. I actually don't know why, Douglas. I think there's a geopolitical...
Stable economy,
stable.
Demographics are favorable, I guess.
I mean, there are all these other elements, but there's one country more than any other country that seems to be really interested, is Germany. I mean, you keep hearing Germany all the time, and now, you hear about their engineering companies. Because when they move engineering, it's not even like moving, some software development or something like that. It's a really big investment that they're about to make. And they're really serious about it. Even, I think, Albert's construction company, they were talking about moving some parts of this to Vietnam. So why Vietnam? Are you much more productive, efficient than us Sri Lankans? Why not Sri Lanka? Sorry, you had...
So just one question. So just to confirm again your view on the equity markets and inflation and things. So we may see ourselves like putting one leg out of the bottom. We may have some rebounds in the short term, but then we are due for the ultimate recession for a long cycle.
I think so. I think you will get this bounce on the bottom for a bit until people are exhausted. Sorry, yes, he's asking the question about whether this current recovery means that we have ended the fall in equity prices. And then he followed up by saying, but according to the long cycle thinking, this is not the end. You might get a recovery, but then you get another leg down. And we should be aware of that. Now, I fully agree with that. The only thing is, which countries are you going to look at for the future? So there are some interesting research that we did, that we were looking at, is when you look at the US in the 1920s, and their collapse of the stock market was more than 80%, actually one of the worst in the world. But that is actually a sign of vitality. It's not a sign of weakness, it's actually a sign of vitality, because what was happening in the US, the old industries were being massacred, and the new industries were rising. And if you see the share prices of the new industries, they were far more resilient. You just didn't see that because the old industries literally collapsed, they evaporated. And so it's not a coincidence that you see a lot of East Asian countries, their stock markets have suffered much more than other countries. And then why, when East Asia is so much more productive, so much more efficient, so much more profitable, so why is that? And that is because I think you're seeing a much more rapid shift to the new technology industries in East Asia than you are in other parts of the world. And that is very similar to what happened in the US.
So just coming back to your slides, there was one question, whether the Fed will rescue us again. So as you see, you said that potentially China may gonna be the next number one economy in the world. We don't know, but potentially. So how about the central banks of China? Where how that goes, maybe how can it get bigger, like in 2016 when it came out and rescue the world with some stimulation.
Yeah.
Yeah, at that time. So this time, we have something to expect for like China is opening up their economies after more than years of lockdown.
Yeah.
And even China, they are trying to save their own real estate market. Also more, I think, accommodative money policies, fiscal policy there. So this rebound, so this short-term rebound, let's say, we're going to have that in the next year. So will be on China or US?
In case you didn't get the question, will China basically save the world economy like they did in 2016? I don't think so. I think there was something very special and unique about 2016. We can go into that at another time, but I don't think now is the right moment. It's like the most powerful country actually doesn't have an interest in saving everyone else. Its interest is seeing the destruction everywhere else, because it's the most powerful country, and it gets more powerful when there is more destruction everywhere else. So I don't think China is going to do that, but what I see, and I don't know if they're doing it with Vietnam, but they're doing it with many, many countries, is they're doing what is called bilateral swaps. So they're not going to make the yuan the world money immediately, but they need liquidity into the world system. Because if the US is not putting dollars in, is sucking dollars out, where is the liquidity? Because China now dominates the world trading system. Okay, so they are the number one trader for more than 85% of all countries in the world. So where is that coming from? Now, I can see them signing bilateral swaps, meaning instead of going through dollars, directly they accept your currency, you accept yuan. And then the difference, they come to an agreement where it's de facto a loan, and you have to pay interest on the difference. That means to say you are injecting liquidity without using dollars. We don't know where that's going, but India is doing the same thing. So India is doing it with South Asian countries, and now they're talking about having world currency alternative to the dollar. So that is where we are. I don't think the Chinese want to have yuan as world money. It's my understanding that they're very reluctant to play that role, because then they have to run a trade deficit. So I don't think they want to do that.
So there may be a case that everyone has part defined. I mean, not only the US is the only number one currency, but also that we will have yuan, we will have euro, we will have other currencies.
Yeah.
Yeah, we have maybe certain portion.
Well, for a while that always happens. So when the dollar replaced the pound, actually there were many currencies that were being used at that moment in time. So between 1919 and 1950, there were actually several world currencies at the same time, until then the dollar established itself as the number one reserve currency in the world.
So during that transition time, so should we hold like US as physical assets like gold?
Yeah, I was waiting for gold to be discussed. And that's a fact, okay? So there are a lot of people thinking that something is happening to gold, and something is happening in the gold market. There are a lot of people, but then, we've always had these stories and they've turned out to be wrong, So but one thing is for sure, is if it's a world money, which is a composite, then gold will play an important part. That is for sure, I think. So they're saying 20 commodities and 5 world currencies as one basket. Okay, that's the last I've heard. And then the weight for the commodities will be heavily in favor of gold. And but then you want gold stable. You don't want gold fluctuating. So there will be a moment to allow gold to find a level and then to stabilize it. And so that's making everyone crazy at the moment, is what is the proper level? So $3,000 an ounce, that's what I've heard. $5,000 an ounce, We don't know. How are we doing? Oh, I nearly have to go. I'm eating at 4 P's at dinner. He's the one who used to write to me the most, my friend.
I tried to invite you for a coffee, actually. Just talk about Vietnam potential, because we were talking about manufacturing reforms, how Vietnam has transformed into a manufacturing country. But then we might hit the limit. I mean, Vietnam is aging, the population is aging. You're not like young like 10 years ago, working for lower salaries, for longer hours. We may see decreased productivity along the way.
Yeah.
So recently I read on the news that the government wants to boost the, let's say, the financial hub in Vietnam. So together with IT technologies, we try to imitate Singapore, like we try to adopt more finance hub here. So what do you think about it? Is it a good way?
Well,
Possible in the long term?
it's not good at the moment, but eventually there'll be more financial liberalization again. But don't forget what happened to Vietnam when it tried it prematurely in 2001. Okay, it was a disaster. But eventually there'll be more and more financial liberalization. That happens as you become more mature. I think it's too early to talk about Vietnam actually getting to that mature stage of development. But by 2030, I think you will definitely see that,
By 2030, we will major.
By 2030, I think you will have really quite high living standards.
And the strategy export-oriented.
I think, yeah, and it won't be like this export-oriented. You're now moving to higher and higher value added. You know, not the low value added. You go to higher value added, where it's less labor intensive. Okay, so, you know, you're training a lot of people, a lot of engineers are coming back. Your factories are becoming robotized. You know, you're not having the manual labor that you had in the past, because now you're technologically more sophisticated as a country. I mean, looking from outside, I see tremendous changes. You know, I just cannot believe I'm seeing exactly what I saw in Nanjing all over again. You know, it's sort of a bit crazy. It's déjà vu for me that I saw the same thing in China. I'm now seeing, but faster. So in China, it took 20 years. I think what I saw in 20 years, you have done in 10 years. And that's correct, because technology is different. And the speed at which technology has come in is much faster for you.
Those countries that have high technology to us, just bring those expert or professional from the advanced country would give technology to us. Then
You need but you need them less and less. There are a lot of skilled Vietnamese now. There are a lot of, you're producing a lot.
Repeat that question. I heard.
Sorry, yeah.
Just a part of it has something to do with me, I think.
Yeah. So basically, we need to encourage more of the expats to come with their technical know-how and their technology. I would say, yes, in the past, that was really important. But now it's a question of keeping your trained people here in Vietnam. Because, you know, you're training people and they're leaving. You know, so
That's one of the phenomena that happens. So the Vietnamese government actually does sponsors for people to study abroad for PhDs, and the likelihood of them coming back.
yeah, they should come back.
Yeah, even they get penalized when they don't come back. But when their salary's $150,000 US a year compared to much less than that year, then they just pay the penalty and it's easy. So it's an intellectual drain in Vietnam at the higher level in terms of management, in terms of the academic side. It's a problem.
Yeah. Engineers is a big problem.
Yeah.
I remember.
Programmers, engineering, all those, anyone that are at that top peak, they're exiting.
Yeah. So that's a challenge, I think, and that challenge can't be legislated for. You have to have the opportunities and the salary structure in Vietnam.
Yes, we pay high as same as you work.
Exactly. And that, I think, will attract people, and, you know.
Actually, our salary is not much because of the environment, the working environment.
Yeah. That's also true. I mean, it's so much. I think we were discussing it in our class, weren't we, this time? Some of you were telling me you preferred to work for European companies because they're more flexible and they give you more encouragement to use your own initiative. And once you have reached a certain level, you want that freedom. You know, you don't want to be constrained in the way that is traditional. And I can't remember which, somebody was telling me, who is the management consultant? I forget. I know I saw you earlier. But somebody was telling me that Vietnamese companies are very hierarchical you were telling me, isn't it? And that there are a couple of companies that are changing, they're breaking the mold, and those companies are actually quite strong. And exactly. So I think the culture will change, because otherwise, if it doesn't change, you will lose all these talented people. So I think you should see that change. It's nice to have seen all of you. We should do it again more often, isn't it? Next time. We will do that, I think, Douglas, isn't it? We'll do that.
Absolutely. So I want to thank you, Howard, for coming and sharing with us today. It's very
Pleasure.
insightful. It's very good to have Howard. Some of you you learned online with him, so it was a good time to actually meet him. Some of you just are recovering from his exam. So it's good to see Howard's a nice guy. He doesn't mean to do the hard exams, but they're there. We do appreciate it. Thank you for bringing your guests as well, and we appreciate it. Okay? Thank you very much.
Thank you.
And if you can send this to Gum and myself, and we'll distribute it to the students.
Thank you. I'll do that. I'll do that.
Maybe Bram can send it to me and pass it around. So thank you very much. I appreciate everyone for coming. Okay?
Good luck, everyone. Do well.
We do have an alumni for UCAM. The alumni event's coming January 6th. Make sure you come. There will be several professors coming from Canada to that, as well as some other guests. That'll be January 6th. I know cohort 9 is preparing January 6th. It's the whole alumni from cohort 1 until 10. 10 are not alumni, but they're future alumni. But you guys will be alumni. Okay. They'll be close enough. We call them alumni.
Bram, did you take the USB? Oh, I couldn't spot it.
Thank you very much.
Thanks for organizing it, Douglas. It was lovely. Good to see some of them again, who I hadn't seen in ages.
So can we
Thanks for your question.
So can we our last